You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. This is the Financial Survival Network. I'm Kerry Lutz, and today is 3/1/21, and it's time for Mickey Fulp's monthly major market review. And what a review it's going to be. You think sometimes, Mickey, it can't get any crazier, and then invariably you are proven wrong.
Well, it was quite a month for the markets, not the least of which was the Robinhood hedge fund debacle. And then, of course, Congress had to have some hearings, and the politicians showed how dumb they are about the way that markets actually work. But that said, we hit highs in all the major U.S. indices over the month, although they did not close at highs. Dow closed at 3932, up 3% on the month. Its high was Wednesday, as was S&P 500, closed at 3811, up 2.6% on the month. Nasdaq took a major correction after its all-time high on Wednesday. On Thursday, came back a bit on Friday. It closed at 13,192 for nearly a percent gain, but it was actually well above 14,000 last week. And finally, the Russell 2000, which has been the big winner in 2021, up over 11% at must close, but it actually peaked in early February and came off a bit after that.
Interesting. And in the midst of all this turmoil, stock markets are heading higher. Who would have thunk?
Well, it's all about Fed speak and untruths. And really, the Fed is fueling this. We've talked about this for years, Kerry, about the next bubble the Fed was going to create was the stock market bubble. And it goes on and on and on.
On and on and on. That's correct. And with no end in sight. Hey, so even our neighbors to the north got some of this benefit of this inflation fever, huh?
Well, they did, but let's look at the VIX first, S&P 500 Futures Index. It's been most of the month in the low 20s, but it was bracketed by very high volatility, both at the beginning of the month and the end of the month. Friday at an even 28. Toronto Stock Exchange hit an all-time high in mid-February. It nearly matched that last Wednesday, came off as did all markets on Thursday and Friday, closed at 18,060 for nearly a 4% gain. Toronto Venture Exchange has just been crazy. It went exponential over the month with very high volumes that have never been seen before. And it peaked once again on Wednesday above 1,100. And that's the first time it had closed that high since I'm scrolling in August of 2014. So 6.5 years, Kerry. And it lost 95 points by the end of the month, but still closed at 1019, up 10.5% on the month. The emerging markets index was flat over the month, closed up 0.7%, and it once again peaked at mid-month. And that's heavily biased toward China and Southeast Asia.
Yeah, the markets were kind of uniform there in that regard. Next, we'll look at the money, what's going on there with the dollar and the euro, that little battle.
Yeah, the dollar ended up stronger on the month, but I think it probably ended up at its monthly high on Friday, closed at 90.94 for 0.5% gain. It actually dipped below 90 in the early part of last week, but rallied toward the end of the month. Euro was minus 0.5%. Dollar goes up, euro goes down. It closed at 121. The big news really was, and this has to do with Fed speak, is 10-year bonds went on quite a roll. Hit a post-pandemic high, actually touched 1.6% on Thursday, I think, and closed at 144, up a whopping 31% on the month. And this was very negative for gold. We'll talk about that in a bit. Meanwhile, Bitcoin went manic, reached a high of over $54,000 per Bitcoin, setting up for the inevitable panic. It closed the month at $47,672 for a 38% gain on the month.
What can you say about that? Who would have thought it would ever hit these numbers when we were talking at the Liberty Mastermind conference that we had in Vegas, and it was around a few $100 per Bitcoin. But here we are, 6-7 years later, and it's strutting its stuff. Well, bad month for gold.
It was a bad month for gold. It's been a bad 6 of the last 7 months for gold since it peaked on August 6th at $2,063 per ounce. It's gone straight downhill from there. Overall loss, something on the order of 18%. Closed the month at 1735. It actually broke below resistance, which it had been testing for most of the month at 1775. We'll see where it goes from here, but the gold market is not healthy right now, and it really was strongly affected by the dollar and the 10-year treasury. It was pretty easy to figure out what was going to happen because the dollar was way down the early part of last week, and gold went down. So as soon as the dollar went up, 10-year bond went up, gold fell off the cliff. Silver had a very interesting month after the Robinhood short squeeze on GameStop, which was very successful until they shut Robinhood down. The next trending thing in Twitterverse was silver short squeeze. So all the silver bugs came out and decided it was time to short silver, and they were going to squeeze the silver shorts, and that got off the ground like a lead balloon and did not work.
Very silly notion.
A very silly notion. Are you going to take on J.P. Morgan? Come on. Anyway, it closed at 26.70 for a percent loss on the month. We told you it's going to happen. That platinum was going to be the best performer of precious metals in 2021. So far, that's happened. It closed at 1181, up 10.8% on the month. At one point before all the precious metals came off on Thursday and Friday, it was up over 20% year to date. Anyway, look for platinum fundamentals to make for a very strong platinum market in 2021. Palladium was up a bit too. It closed at 22.29, up 3%. And the real news in commodities space, well, there's two aspects of this: Dr. Copper and big oil. And Dr. Copper went exponential over the month. On Thursday, it hit a 10.5-year high of 428. It came off on Friday, closed at 419. If you look at the data, copper has only traded above this level in the year of 2011.
Correct.
It was up 18% on the month, driven by supply-demand fundamentals, low inventories, the idea that the world is emerging from coronavirus panic and paranoia. But more than that, it's really driven by speculation. It is not a healthy market at this level. Up over 100% since March 23rd of last year, Kerry.
Yeah, well, it had been in the dumps. Remember, it crashed in March, and it had been in the dumps before that. So some price appreciation is expected, but probably not anywhere near to this degree. Energy, man, like another parabolic market in the making, huh?
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, certainly, Kerry, and I guess it's really not surprising. What's the world run on? It runs on oil, and Dr. Copper is the world's leading economic indicator of the relative health, let's say. WTI closed up almost 18% to 61.50. Brent up 18% to 66.13. And basically what's going on, Kerry, is the supply disruptions have been greater than demand disruptions. And certainly the world's using less oil, but supplies really come off, and the market's just a little bit out of whack right now. Henry Hub, Natgas, had a very interesting month with the big weather event in the central part of the U.S. and even the south central part of the U.S., which really devastated Texas windmills froze up, and
solar
nat gas wells froze up, and the Texans were without reliable electricity for a while, much the same as what has happened in South Australia within the last couple of years, happened in California last summer. When you go with renewables, they're not always reliable, and they cannot supply baseload electricity. That said, nat gas closed the month at $2.77, up 8%. But the spot prices were crazy for about a week there. And here's a good one for you, Kerry. The Delaware River Basin, not the Delaware Basin of West Texas and New Mexico, but the Delaware Basin, River Basin, in your old part of the world, in the northeast part of the U.S., including southern New York,
New Jersey,
northern New Jersey, eastern Pennsylvania, and whatever part of Delaware. It's such a small state, I don't even know if it had quadrants, but they banned fracking in the Marcellus Basin. So, they won't build pipelines, nat gas. They're banning drilling for nat gas. I guess we're just going to have to let the SOBs freeze in the dark.
Yeah, it's inevitable, I'm afraid. And this is the kind of stupidity that has gotten this once great country where it is today. But that's for another day, Mickey. All right, so next is uranium.
Hit 11-month low, went below $28 at the end of the month, closed at $27.88. That market's down something on the order of 8% already this year. We haven't seen a uranium price this low since during the coronavirus panic in March of last year. But get this, with the price hitting basically a one-year low, speculative dollars are pouring into uranium stocks.
Go figure, huh? Go figure. Hey, so finally our ratios, the gold to silver ratio is sinking.
Yeah, gold to silver ratio is pretty normal now at 65. Now, the mean and median are in the upper 50s, but after being so crazily out of whack for, what was it, nearly 3 years, that ratio is getting into normal levels. At 65 this month. Platinum to gold ratio, since it hit its low in April of last year of 0.45, is now all the way up to 0.68. But let's look at the mean and median there. It's only halfway to that. And finally, platinum palladium, which hit its all-time low of 0.32 12 months ago, is now at 0.53. But the mean and median of that ratio, Kerry, is 3.0.
Wow, that's amazing.
Yeah.
Well, I wonder if palladium prices are ever really going to go down again.
They'll go down.
All right. Well, we'll see.
Markets normalize
over time.
And finally, we'll look at the gold to WTI ratio. For the first time in a year, we have not exceeded the previous all-time high for that ratio, closed at 28. So still high, but not at those record levels we've been seeing over the last year.
Yeah, what can you say, Mickey? These markets were so volatile, and there was a lot of potential there for profit if you were in the right place at the right time, but that is always the key. And I think for the remainder of the year, we're going to see volatility across the board, and it'll just be interesting to see where they go in March.
Well, Kerry, in that regard, I'm working on an essay, a think piece right now. It will be out a week from today for my subscribers, and the title of it is Why Manic Leads to Panic.
I love it. Great title. And make sure you go over to mercenarygeologist.com. Sign up for a free subscription to Mickey's musings and his writings. And you can also find him on Twitter at mercenarygeo. Check our site out. Sign up for our free subscription, financialsurvivalnetwork.com. And, of course, the Twitter feeds at Kerry Lutz. Mickey, we will pick up on April Fool's Day. I have got the best April Fool's joke that I am going to blast out. You're going to love it. I'm just promising you this. I'm not a practical joker type, but I do have a sense of humor. This is going to be an April Fool's joke to end all April Fool's jokes.
Are you going to roll it out on this show, Kerry?
I'll talk about it on the show. I think I'll blast it in the morning, but you're going to love it, especially if you're not into or into cryptocurrencies. A little hint there.
I can't wait.
All right. It's going to be great.
Well, I can wait, but
you're going to wait because it's a month.
I'm going to wait.
All right, Mickey. We will catch up with you April Fool's Day. Enjoy March, and spring is soon going to be upon us. So we'll talk to you soon.
Thanks a lot, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.